It's a pretty common belief that everyone needs to pay for life insurance. However, when you reach a point in your life when no one else is dependent on the money that you bring in for their own needs, then it might make more sense to put your money somewhere else. Hi, Vincent here from The Simple Dollar, and today we're going over when can you stop paying for life insurance. And if that sounds good, make sure you smash the subscribe button to always get the latest and greatest from The Simple Dollar. And remember, you can always find this content and even more by visiting thesimpledollar.com. The main purpose for life insurance is to provide for your dependents if you pass away. And this becomes especially important when we're talking about spouses or even children who can't make it on their own with their own income streams. In these cases, if you pass away, then your life insurance will actually take the place of your income. While life insurance is a good financial tool, it isn't right for everyone. When you actually reach financial success, then your savings, your investments, and even your home equity could be sufficient to provide for your dependents. When you set away funds and investments away for your dependents in case that you pass away, then this is called self-insuring. And if you're in a position to self-insure yourself, then you might not need to actually pay the premiums that come with life insurance. The need to maintain a life insurance policy typically diminishes as you age, and we've actually seen a lot of retirees tend to opt to drop their coverage for life insurance. The main reason for this is because as time passes, your home mortgage will be paid off, your children will grow up to become financially independent. In addition, the price of actual life insurance also increases because your risk of death increases as you age. However, this price increase could be avoided if you purchase a permanent life policy, which keeps your payments level over time. When you become a senior citizen, it makes financial sense to weigh the benefits as well as the cost when it comes to having life insurance. If you're only 40 years old and you expect to support a household for the next 20 or 30 years, then it might make sense to actually have life insurance. However, if you're a retiree and you're financially independent and financially stable, then it might not make sense to pay increasing premiums year over year for life insurance. Seniors sometimes opt in for life insurance in order to create a legacy for their children, their grandchildren, or even for a charity. However, if you are a senior and you don't have a good cushion of cash in order to support yourself in your old age, then it might make more financial sense for you to actually save that money or invest it somehow instead of paying premiums for life insurance. And before you go ahead and decide to drop your life insurance, it's actually really important for you to review your finances and make sure it makes financial sense for you. And if you do decide to drop your life insurance and later down the line you think that it might be more worthwhile and you opt in for another life insurance plan, then that new plan could be extremely more expensive than your current plan. And depending on how your health has changed over the past couple of years, you might not even qualify for a new plan. However, there are 4 really important questions that you should ask yourself before you decide to drop your life insurance policy. But before I get into those questions, remember to smash that like button, and remember you can find out this information and a lot more by visiting thesimpledollar.com. The first question you should ask yourself is, do you have children or dependents that still have to finish their education? College costs continue to rise exponentially, and you want to make sure that your children can still go to college and finish your education if your income stream suddenly gets cut off. The second question is, can your spouse or domestic partner financially support themselves if you pass away? Now, a lot of times their spouse or domestic partner can financially support themselves. However, the situation is not always the case. For example, if your spouse is disabled or has gotten some sort of injury and isn't able to work anymore, you want to make sure that they're able to sustain themselves if you pass away. The third question is, can your family afford to pay off the mortgage or any debt that you might owe? If not, then they might be forced to uproot themselves and actually sell the house. The fourth question is your life insurance need going to change? It's really important for you to actually reassess your life insurance policy, especially after some major life events, such as if you get married, if you get divorced, if you have children, etc. If you do decide to get life insurance or to keep your life insurance policy, you need to decide if you want to get term life or whole life. Term life insurance policy essentially means that you're covered for a set period of time during your life, and whole life or permanent means that you're covered for the entire period of your life. Term life policies are typically much less expensive. However, whole life or permanent policies tend to build cash value over time. In fact, some financial experts say that because most of the big ticket items that we purchase in life are temporary, typically term life insurance is the better choice. For example, your mortgage will eventually be paid off and your children's college tuition will eventually be paid off. So these temporary big ticket items may be more suitable to be covered with a temporary life insurance policy. So another question we often get is, what happens to your life insurance if you stop paying for your life insurance premiums? When it comes to term life insurance, there really is no long-term financial commitment. other than your next financial premium, which means that if you want to end your life insurance policy, you can simply stop paying. As always, thank you so much for watching. If you have any questions, feel free to leave a comment down below and we'll get back to you as quickly as possible. And remember, if you want to get more videos on money and personal finance from the Simple Dollar, remember to smash that subscribe button and ring the notification bell. And as always, you can also find this content and even more by visiting thesimpledollar.com.